Hi, good afternoon or good morning, wherever you are in the world. I thank you for taking the time to join us on this another of our investor briefings. These briefings are intended to provide you, our shareholders and stakeholders, with an overview of your company. We feel that these briefings are critical, not just to provide you with information around our financial performance, but also give you an opportunity to get to know the individuals behind the Proven Group. Today, we're going to do exactly that. We're going to give you a special investor briefing that will allow you to see and hear from the leaders within the group, individuals that are running the various subsidiaries across the Proven Group. Before we jump into the numbers, I want to apologize for the unfortunate technical circumstances that did not allow us to broadcast last week Monday. The bad news is our cybersecurity network and systems blocked the feed. The good news is our cybersecurity network and systems blocked the feed. So, it's working. And as you know, the cyber threat is real and is constant. So, our system is working, and so if we take anything from the disappointment of last week, is that it's working. All right, so we're gonna get into it, and we're gonna give you both quantitative and qualitative information today. First up, the key metric that we will always have to watch is revenue. You can't grow profits if you don't grow revenue. So, we want you to keep an eye on this metric, and we'll chat a little bit more in detail with Johan in a second about these metrics. But just to give you the big key top line numbers, 34.9 million, up 23.3% for the first 6 months of the financial year. And that's what we want to see. We want to, as I said, we can't grow net profit and therefore grow dividends and therefore grow EPS if we're not growing this number. So that's a good start. The second key number is year over year net PAT is up 117%. So again, we're heading in the right direction with that number. Earnings per share, which as I said the last time, and I'll repeat, that's the key number that you guys need to watch and that we watch, and that is $0.0046 US dollars, and as I've said over and over, we want to get that to 0.03. So we're tracking upward, and we're going to get it there. This is for 6 months, obviously. The dividend, you need to be paid just as much as as I am as an employee, and as others are. You need to be paid, and so we're very committed to ensuring that our shareholders get a check every quarter. And again, the board did approve a quarterly dividend of 0.0015 US dollars, which is in line with what we did last quarter. In terms of our size, we're maintaining pretty much around the same size. We're over $1 billion US dollars in total assets, and our assets under management, which which is also a critical metric because we earn fees from that, is 1.64 billion. So, the group, which is, coming up on its 14th year, has been growing nicely. And, I guess combined, we're closing in on close to $3 billion US dollars in cash and in funds that we have access to. So, first 6 months, the metrics are looking good, but I'm going to hand over to Johan that will give you a deeper dive into these numbers and give you a sense of, the good news and the bad news of these numbers. So over to Johan.
Well, thank you, Chris, and good evening to everyone on the live. As Chris says, the metrics are moving in the right direction. What you're seeing on the screen is a breakdown of our net revenue over the 6-month period, which was mixed but very encouraging across most of our revenue lines. The first being net interest income, which is really our star performer for the 6-month period, up by 40% over last year, mainly driven from a growth in our credit portfolio for one, and also just increase in global interest rates and the widening of our spreads, which is the difference between what we earn on our assets and what we pay on our liabilities. So overall, up 40% for the 6-month period. Our next main line is our fees and commission income, which we earn mostly on our wealth management business. This was down by 6%, 4% for the 6-month period, but actually up by 9% during the quarter, which is very encouraging, especially given the current environment that we're in. We actually saw an uptick in the quarter compared to last year in terms of our commission income and the amount of commission-based sales that we did during the quarter. So very encouraging that we're seeing a recovery in this line item. The next line item are net fair value on adjustments, basically the growth in our investment portfolio, both of our securities and our real estate assets, grew by 60% for the 6-month period compared to last year. And majority of this growth came from an appreciation of our real estate holdings, which we revalued during the quarter, and really speaks volumes to our diversified portfolio and the benefits of having real estate in our portfolio, which provides an excellent hedge against rising inflation and is currently offsetting, the lower than expected security trading gains that we're seeing at the moment. So, really, really great quarter, and as expected, the real estate is providing an excellent hedge right now. Next line is our pension and management income, which is pretty much one of our most stable revenue lines, very predictable, and growth of 18.7% for the 6-month period, coming in at 1.9 million. And that growth has come from a growth in our assets under management, which Chris pointed to earlier, and also, growth in asset prices for the funds that we manage as well. Our other income, which was driven mainly by our Roberts business, had a whopping 50% growth in revenue, up to 15 million for the 6-month period. And this was primarily driven by a normalization of our manufacturing margins compared to last year on our business in Barbados, Roberts Manufacturing. So we're very, very happy with the performance of Roberts and the other income items. The share of results of associates, however, was down for the quarter, down by 42.69%, coming in at 2.7 million. And this was mainly driven by our share of JMMB's losses for the second quarter. And we expect that for the balance of the financial year that we'll see a recovery and a turnaround in this line. But this was the main revenue line which pulled down our performance for the 6-month period. So overall, 23.3% growth in net revenue. And after expenses were up by 6.6%. We're very happy that we have our strategies in containing expenses has been working. For the quarter, we had some one-off expenses from a staff restructuring exercise. So we expect over the quarters to come that our efficiency ratio will improve considerably and get us in the range that we've targeted. So overall, after expenses, net profit growth of 117% for the 6-month period. As I said before, for the quarter, we actually made a small loss because of the share of profit on JMMB. But for the 6-month period, we're very encouraged overall, up by 117%, and earnings per share of 0.0046 per share. So that is pretty much a performance for the group for the 6-month period. Back to you, Chris.
Thank you. Let me just go back because I think we kind of skipped over who Johan is. So let me just put back that slide up that has his title. So yeah, just to introduce, Johan is the deputy CEO for the group, and he also acts as the CFO for the group. So he's the man that knows all the numbers and keeps us in check. So just in case you guys are wondering who is that guy talking to you about these numbers. Again, with also before we move on, the big disappointment for us for the quarter was the share of loss from JMMB. Just to walk you through the 4 pillars, again, and just consistently remind you of your group and what we're involved in. So we have wealth management across 6 jurisdictions. We have banking across 2 jurisdictions. We have properties, which is primarily in Jamaica, Cayman, and Barbados. And we have private capital. Private capital is the equity positions that we've taken, the strategic equity positions that we've taken in companies. And we have 3: JMMB, Access Financial, and Roberts Manufacturing in Barbados. So we're going to give you a little bit more on all 4 strategic pillars and just walk you through what these guys are doing specifically and who has done well for the first 6 months and who has not done well for the first 6 months. So first up is, I believe it's Simona. So if we could, let me just, so Simona heads our Proven Wealth Region 1. So we've divided the wealth pillar into 2. Region 1, which is Barbados, BVI, Cayman Islands, and Bermuda. Simona is based in the Cayman Islands, and we'll throw it to Simona and ask Simona to give us an update on what's going on in Proven Wealth Region 1.
All right. Thank you, Chris. Good afternoon, everyone. So as Chris just mentioned, Region 1 really covers Barbados, BVI, Bermuda, and Cayman. Our primary focus is that we offer tax-free investment solutions through our mutual fund sales, and we provide alternative funding solutions through our investment banking. Over the last quarter, we have really been keeping focus on how we started out the year, which is really 3 main areas, looking at revamping the team since the acquisition of the company that we acquired in 2018. We're looking at ensuring that we have client acquisition and retention sorted, as well as ensuring that from a regulatory and compliance standpoint, that the business remains committed to being compliant in all the jurisdictions in which we operate. For Barbados, we are just in the process of getting into that space now and looking primarily in the investment banking space in Barbados, while the other 3 markets are focused on our wealth management products through mutual funds. So a big part of this, when I say diversifying or revamping the team, is really looking at taking on additional staff, which we have done, diversifying our product offerings, just to ensure that we're in alignment with the group. And we've also ensured that we've increased our marketing presence in these areas that we're operating in, creating that brand awareness while we're maintaining those strong relationships with our existing clients. We remain committed to growing revenue. As Chris mentioned before, that's a primary focus for us. So we want to increase our revenue through our product diversification, leveraging and building on the strong proven brand across the region. And we look forward to making a significant impact within the group over the next quarter. Thank you.
Thank you, Simona. All right, so next up is Luana. Luana heads Region 2, and Region 2 covers Jamaica and the Bahamas Islands. So we'll throw it to Luana to give us an update on what's happening with her portfolio.
Sure. Thank you, Chris, and good evening, everyone. So at Region PWL Region 2, we generate our income mainly through our trading income lines, as well as our fee income lines. And the fee income line includes our management fees from our assets under management or funds under management, as well as our investment banking portfolio or division. Like most securities dealers in Jamaica, we traditionally would have enjoyed most of our income coming from securities trading. However, as we know, we have seen unprecedented high rates in the interest rate environment globally. And what that has done, it has reduced our revenue from this line. So on the line of that, or on the back of that rather, we have pivoted and we have now shifted our reliance away from trading income and have now focused or building our more stable fee income line by growing our assets under management. To support that, we have developed initiatives around growing this line of business. And I must add here that I'm very proud of our performance of our proven select fund suite, where all 6 funds are in the top 3 in the Jamaican market, with our US dollar money market fund and our high yield fund being number 1, ranked among our competitors. Another product that we're very focused on growing is our Heritage Education Funds portfolio. And we're doing this by improving the client support around the product, as well as, of course, offering attractive returns as the fund managers for this suite. Our aim is that all our clients, no matter where they are in their lives, they will benefit from the expertise of our portfolio managers, as well as our wealth advisors. This year, we are focused on improving client intimacy. And just one way we're doing this is by deploying technology that allows us to understand and to serve our clients in a way that they will appreciate most. I'm pleased to announce that we expect to launch to our clients our Proven Connect client platform in the last quarter of this financial year. What this digital solution will do is that it will improve the experience of our clients by allowing them to initiate their transactions directly and reducing processing times, which we know time is money, everybody wants that, and access account information independently and securely. As we deploy technology, this also helps us to manage and reduce our operating expenses, as it means that there will be less resources that will be needed to process transactions, and it will improve our ability to scale as we expand. We continue to remain steadfast in our goals to increase our revenue by growing our funds under management business and carefully managing our operating expenses. On behalf of my team at Proven Wealth Region 2, we thank you for your support. Over back to you, Chris.
All right, thank you, Luana and Simona, both representing the wealth platform. And for us to win in that race, we have to deliver the best performing funds and the best performing client intimacy. Those are the top 2 KPIs. And we're going to improve the client intimacy with technology, as Luana says, and we're going to continue to be the top fund. As she outlined, we are in the top 3 for all categories of funds, and in 2 of those categories, we're in fact number 1 in terms of performance across the entire industry. So, you know, we're coming for that market. We're coming for that market. A market that's been performing exceedingly well, and you know, we're very proud of this acquisition, which was done, you know, probably about 18 months ago, is the bank in Cayman, Proven Bank Cayman, and we're going to introduce Colin McDonald. And we're going to ask Colin, speak as slowly as you can, please. You know, Colin, and you'll know why when he starts speaking. So, Colin.
Thank you, Chris, and good evening, everybody from Proven Bank in Cayman. Financial year 24 has been a year of growth and stability for Proven Bank Cayman. The deposit base has grown and is currently $9 million over budget for the year to date, mainly due to growth in the corporate and high net worth segments. A combination of ramped up marketing and events, regular meetings with key clients, and focused customer service delivery has driven this growth. Year to date, we've seen our customer numbers increase, adding over 200 corporate accounts and over 300 consumer and premium banking accounts. In addition, a number of these new clients have taken out term deposits, which further strengthens our liquidity ratios and overall stability of the bank. In regards to lending, while rates remain high, our lending focus is primarily on secured high-value mortgages for clients with a loan-to-value ratio of no more than 80%. Market forecasts expect the Fed rates to decline next year, bringing more money back to savings and term deposit accounts over time, and that will support our net interest income that was mentioned earlier on. As such, the focus, therefore, will be continuing good customer growth numbers. As Luana mentioned, the next 4 months will also see the rollout of a new banking system, which brings significant improvements to the customer experience and will support the aforementioned growth well into the next financial year and beyond. Thank you.
Thank you. You know, we constantly have an argument between us because Colin, where are you from? Where's your accent from?
Scotland.
Scotland. Right.
Correct. Yes.
So we all sit in a room, and you know, we can't understand each other. We're speaking English. So Colin is Scottish. We're speaking Jamaican, and we're in Cayman. You know, and they're speaking, you know, with their Cayman, and we're arguing over who has the accent. And we're like, you know, we don't have an accent. You have an accent. So yeah, it's always fun. But you know, in shareholders and stakeholders, you know, I want to continue to big up the Cayman team. You know, they've really delivered over the last 18 months, and they continue to deliver a rock solid performance. So congrats, Colin. Heading down south, down to St. Lucia for Proven Bank St. Lucia, and we're introducing the brand spanking new country manager, Cindy. How you doing, Cindy?
Hi.
Cindy?
Hi, good evening, Chris. I'm doing well. How about you?
Doing fantastic. Of course, I can't pronounce your name, your surname, so I didn't bother to try. I butcher it all the time. So you can pronounce it for our shareholders.
I will do that. Good evening, everyone. I am Cindy Baptist. I am the new country manager for Proven Bank St. Lucia Limited. Pleasure this evening to take you through our bank's performance for the first half of this financial year. I will then speak about some upcoming initiatives at the bank. So Proven Bank St. Lucia has demonstrated resilience and sound performance during the first half. Despite the challenging economic landscape, we've delivered strong financial results. For the first half, net income increased 147% year on year. This was realized by year-on-year operating income growth of 29%, while effective cost management has allowed us to achieve about 18% from last year's cost base. Just for context, our operating income mainly comes from net interest income from our securities portfolio and fee income from our payments business. Our return on equity is just over 20% and it's in line with our targets for the year. Our forecast points to this continued performance through the second half, and we are confident that we'll meet our full year target. This proudly shows our commitment to stability and consistency in our operational performance. Here at PBSL, we take pride in our product offerings, which include our multi-currency accounts, allowing our clients to access 14 global currencies for transacting and foreign exchange. We offer a robust cross-border payment service with international wire transfer services and payroll services in all our offered currencies. This gives our clients a safe, convenient, and reliable avenue for conducting their business and affairs across the globe. And of course, our pride is in remaining accessible. Here at PBSL, we put value in offering our clients the human experience, being able to call and speak to our agents who know you, your business by name, exemplary customer service and experience. Looking ahead, we're excited for some key initiatives which will improve our operational efficiency and effectiveness. As Colin indicated, we are undergoing a transition over to a new banking system by ERI Olympic Banking as part of our digital transformation. This move is expected to improve processes, cost effectiveness, and help reduce risk. On the business growth front, we continue to target our key markets of Caribbean and LATAM. PBSL remains committed to delivering exceptional financial services while embracing innovation to support sustained growth. We are dedicated to fostering long-term relationships with our clients, employees, and other stakeholders, ensuring mutual success and trust, and being a valued contributor of the proven banking pillar. Thank you. Chris, I pronounced my name for everyone.
Yes, thank you. I'll get it one of these days. But when she says PBSL, of course, she means Proven Bank Solution. Just, I know she speaks fast. So yeah, but St. Lucia has been a winner for us since we did the acquisition, I believe in 2017, 6 years ago now, and it's been, like clockwork every year. I'm not sure if you heard, but I mean her efficiency ratio is down below 30%. So that's like, that's in superstar levels. Very, very efficient organization. Thank you, Cindy. All right. So we're going over to the star since we are in our Proven Place building, communicating to you for the first time from our home, our global headquarters here at Proven Place, built by Aisha Campbell and her team at Proven Properties. Over to you, Aisha.
Thank you, Chris, and good evening, everyone. So just to give you a brief overview of our portfolio, which is very diverse as it stands, we currently have 10 development projects in our portfolio, 3 of which for this financial year, we were basically in closeout. So we completed the lagoons in Grand Cayman and handed over those units to the homeowners. We also completed the Ashco warehouses in Grand Cayman, and we've gotten 1 rented, and we have another 2 that we are will soon be rented. And as Chris said, we've also completed our proven group home, Proven Place, and moved into our new home. So we're actually going to be, we've rented some space, and we will be also renting on the market about half of the space that's available for Proven. We also have 4 projects that are either in construction or about to start construction. So we have a Vista at Bloomfield. Basically, we've completed that project and we'll be handing over by early next year to our customers. We also are building on North Coast properties, which we had a big launch in the first quarter of this financial year. That's Bahari in Runaway Bay on the North Coast and Saul Harbor in Ocho Rios. I mean, so sales for those projects have been very robust, and we're moving full speed ahead with execution. And finally, although the image is not here, we also have a warehouse. So, you know, we're really trying to diversify into our logistics sector as well. So commercial, residential, and logistics. And so we're doing that project that's on Marcus Garvey Drive as a joint venture with Shipping Association of Jamaica. All approvals are in place, and we will be launching that project early next year as well. That's about 110,000 square feet of warehouse space in a really fantastic location. On top of that, we also have a couple projects that are in the pipeline, because we always seek to build out a robust pipeline in terms of development projects. And so we did invest in 2.5 acres of land for a residential project in Grand Cayman, another project because the lagoons was very successful for us. And we're also going to continue to build out our Bloomfield Park commercial development in Mandeville. In terms of our rental lease portfolio, because the properties arm, we have both the sales and also the rental lease portfolio. We do continue to have steady and strong tenants in our rental properties, 3 of which are 100% occupied. And we have another property in Grand Cayman that's in a rental pool. So we're pretty excited about our portfolio. We're looking at also closing at least one deal in Barbados before the end of the financial year, which would be another rental income property. Basically for us at Proven Properties, because we're doing a lot of execution. So our strategic focus for the year has been to really strengthen our internal capabilities. We've built out a very strong technical team that can help to execute our projects and manage it internally, along with our partners, but we wanted to have more control over that oversight and that just efficient management of our projects. And so we built out a really strong team over the course of this year. And we are also building out our systems to allow us to be scalable so that we'll be able to execute projects in Jamaica, in Cayman, in Barbados, and be able to do so efficiently with line of sight into what's happening across the projects. So that's essentially what we've been all about this year. And we are just raring and ready to go as we continue to execute, continue to diversify, and continue to bring value in terms of real estate to the markets that we are operating in. Thank you.
Thank you, Aisha, and Proven family. I must say, you know, it's been an absolute pleasure to work with Aisha and her team. I mean, those guys have transformed certainly Jamaica and Cayman in terms of the landscape, and have delivered, you know, iconic projects after iconic projects after iconic projects. And I'm really, really, really proud of how professional and efficient they have been. So thank you, Aisha and team. Just to add a little bit of color on the, if we could go back to properties, to add a little bit of color, the interest rate hike has not gone unnoticed to us. The global interest rate and the low and the regional interest rate hike. So we have had a fairly slow acquisition year of new projects. So everything that Aisha has spoken to you about, we executed in terms of acquiring before coming into this, you know, high interest rate period. And in fact, we achieved significant sales levels before, and those sales have held up and you know, have proven to be extremely resilient to the hike in interest rates. So we're not ignoring the, you know, illiquidity of this asset class, and we're very cognizant of it. Our board and our investment management committee is tracking it extremely closely, and you know, we have already pivoted to a more conservative position. So the, you know, the new projects that Aisha are, again, I just repeating, the new projects that Aisha are referring to are projects that we had already in the pipeline and have already secured resilient sales. New projects that are being proposed to us, we are going very slowly on, because we want to make sure that the interest rate trajectory is at a peak and, in fact, trending down before we pull the trigger on any new projects. So just want shareholders and stakeholders to know that. We'll now jump to our, and you know, I hope you guys would have noticed, but you know, it's like 90% female. You know, it's, you know, it's overwhelming. You know, we're gonna have to do some intervention for, you know, on the male side. But again, another superstar female that heads our Proven Private Capital, the CEO or Proven Private Capital portfolio, Nerisha Farquharson, and we'll hand over to Nerisha now.
Thank you, Chris. Good evening, everyone. So I'm happy to share that for the financial year to date, the private capital business line has been focused on streamlining value creation in the 3 portfolio companies within that we currently own. And just to recap, in the portfolio, we own a 20% stake in JMMB, a 50.5% stake in Roberts Manufacturing, and 24.79% in Access Financial Services, along with a small portfolio, a modest portfolio of private capital. Now, for the period, both Roberts and Access registered healthy operating performance. In Roberts, we saw where the return of stability to the commodities market, coupled with a sharper focus on the commercial side of the business, resulted in a material turnaround in performance. In the case of Access, it navigated successfully a transition of its CEO, and the team is now very focused on driving disbursement growth. And as a result, we have seen where year over year, the profitability of that business has increased by 75%. Now on to JMMB. Yes, JMMB had a rough quarter, but they continue to execute on the business line and the geographic diversification, which both supports their strategy, their growth strategy. As we know, JMMB owns 23% of Sagicor Financial Corporation, and that business delivered solid operating performance, but that was somewhat offset by one-off actuarial adjustments as well as transaction expenses associated with the ivari acquisition. And just for context, that's an acquisition of a Canadian insurance company. That transaction closed on October 4th. And going forward, we expect to see the impact of that transaction on the operating results, and there may be some one-off gains coming in the next quarter. What we saw materializing in JMMB wasn't unique to JMMB. The investment banking line took a hit. We're seeing where their net interest margins have compressed in that business line, resulting from sticky inflation, which has caused interest rates to remain higher for longer. The good news, however, is that JMMB in its quarterly press briefing outlined a plan where it will reposition its portfolio with a view of redirecting the flow of funds into the banking business line as well as value-added fee-based business lines. And what this means is that we will see an improvement in capital allocation as well as revenue diversification, which will support robust performance in financial year 2024. So For this quarter, we're anticipating, going forward, third quarter, we're anticipating that all three entities will perform creditably. And this will be supported by seasonal demand in Roberts and Access, as well as some positive performance coming out of GMMB for the third quarter. So in closing, I want to assure our shareholders that we're working closely with our portfolio companies, that's the board and management, in order to improve cash generating capacity of these investments. And the overall objective is really to deliver value to all our stakeholders. So rest assured, good performance is on its way. Thank you.
Thank you, Narisha. And boy, she said it perfectly, and we are tracking. We have a great relationship with all our portfolio companies. We are very, very, very happy with these investments. We have no concerns. I mean, obviously, we've been in this business for a long time, so we know that it goes through peaks and troughs, and we just have to ride with it. But net, it pays off in the long run. So we're not panicking. JMMB has delivered for us, over several quarters. Didn't this quarter, but no issues. We're 100% confident that they will deliver for us in the near future. All right, so that's it. That's our team. Those are our 4 pillars, and that's our performance. So as I said, we wanted to give you an overview of not just the numbers, but the people behind the numbers and the strategy behind the numbers. So we did that, and we're going to open the floor up for some questions. We have a few minutes left. We don't want to go past the 1 hour timeline. So we're going to open the floor up for any questions at this time.
So the first one, why is Proven Group getting so scanty details in the quarterly reports?
Scanty with the details in the quarterly reports, Johan.
Why 2023 and Q1 report and then a Q2 report with no breakout on the real estate or private capital segments?
Okay. I will reprimand him right after this. Johan.
Yes, noted.
Yeah, we can give more. I mean, we get in. Well, let me tell you, it's not easy because we put out a lot of detail. People complain, so we're giving them too much information, and and we have these investor forums. So some people are saying save it for the investor forums. So but we note, and we can go back to listing the specific projects in the report. Yeah. Mm-hmm.
We have another one from David Rose. Proven Group reorganized its operations by integrating some elements of Proven management. How was Johan moved into the deputy CEO role of the group from CEO of Proven?
Well, how did we do it? I guess we pulled you from Proven Wealth and rewrote his contract and gave him a new contract. That's how we did it. It was a critical move, and I must say, still early days, but so far I feel the benefit of it. Johan, as you know, is a co-founder. He's been there from ideation, and so we always debate on where within the group we need the most focus, and right now we need the most focus on capital allocation, reporting, and funds management. And so the seat that he holds now covers all three, and you know, so we're very, very happy with the move. And, you know, so he's you know, a trooper, and you know, and decided to step up to the group and take that role. I think it was about a year ago we had that conversation. Yeah. So we're very happy with it, and we, you know, we've definitely seen the benefits already, you know, in terms of, you know, just the attention to detail on the numbers, and the efficiency of our capital and our funds, you know. So no, we like him right here beside us. So
So the next one is coming from Facebook, from Joseph Tuck. We know the underperformance of the property sales segment of the group. What is the outlook for this segment, and what is the timeline?
Yes, sir, Tough. No, it's not. The property division did not underperform. What happens with the property division is that it only recognizes income when a project is closed, and we don't close projects, you know, every day. The project closures swing from year to year depending on the construction cycle, and so this year we have much lower closures. Last year we had VIA, which was a 100-unit development, you know, very large, very profitable. So that's why you saw that. And then now this year they're more in the construction phase. They're only closing out two developments, Lagoons, which closed in the first quarter, and they're going to close a Vista in the final quarter, which are both much smaller developments than VIA. So it will appear as if, you know, they're underperforming, but no, they're hitting their numbers. It's just that the big developments that they have, Sol Harbor in Ocho Rios and Bahari in Runaway Bay, those won't close until Q4 for financial year 2025. So, you know, you're not gonna see them hit the P&L again in a big way again until then. But no, they're when we analyze, obviously we report the properties area in the IFRS, you know, financial statements, but we actually track them on a project by project basis and ensure that their projects, each project is hitting above 15% annualized ROE, and they're doing that. Right,
this one is related to Roberts from David Rose. Roberts moved from a loss of $1.13 million USD loss to a net profit of $701,345 USD in Q2. Is it that Roberts' sales volume is increasing considerably, or the reduction in raw material costs?
The latter. First of all, the access to inputs, and then secondly, the reduction, or I wouldn't even just give me stability, and we'll take it. So firstly, stability, and then secondly, you know, some reduction. So yes, it's been primarily on the cost of sales side that we had some challenges last year. You know, between, you know, the end of COVID and the spike, the post-COVID spike of consumption, and then also the Ukraine war. So last year was rough, but it's much more settled this year. We've been able to predict our cost of sales, and therefore, you know, price appropriately, and so so that normalcy is returning, and so we're very grateful for that. But in addition to that, we are seeing some improvement on the sales side and on the margin management side from the team down there in Barbados. So so mostly input management, but also, yes, some marketing / sales / margin management as well. So and we see it continuing. So So they're maintaining that momentum into Q3. So we're very happy. We head back down there again in January for another round of meetings and visits and so on. So it's looking much better. Looking much better.
So we have one for Luana. Has Proven Group injected additional capital into Proven Wealth Jamaica based on the reduction in the capital adequacy ratio in the last year?
Evening again, everyone.
She's on? Okay.
Yeah. Okay. So just to say, our capital remains above our regulatory requirements. So we're solid in that regard. And we will always continue to assess the needs on that basis. Also, as I spoke about earlier, we are focusing now on growing our off-balance sheet business lines of business. So basically what that means, there will be, those business lines actually require less capital, and it actually improves our capital base as our net profit will grow, and that goes into our equity. So we are solid, we remain above the regulatory requirements, so there has not been any need to do that.
All right. Thank you. Yeah, but obviously the key is to get Region 2, back on a positive trajectory, so that that won't even be a concern.
Touching Barbados again, what prospects do you see in Barbados, especially as JFMB Group has already secured the license in that market with a large capital base? And also, has Proven Cayman broken even?
Yeah. Barbados is a great IB space, and it's already profitable for us, in terms of the deals that we've gotten down there. The government is on a path towards more and more liberalization, and we think we need to be there. It's not a big investment. We don't have a huge team down there, but we definitely need to be there, and it works well because of our strong presence with Roberts and also with Proven Properties. So we definitely want to stay there. And it also covers, remember, no, we're not in Trinidad. So we decided to do Barbados instead of Trinidad. And so, Barbados covers Trinidad as well. So, you're getting two markets for one spend. So it's working out nicely, and we're very happy with it. And it's as I say, it's a friendly market because we're already heavily investing with the government there in terms of Roberts and with properties. So we definitely want to keep that relationship and grow it. So yeah. Oh, what was it? Cayman. Yeah, Cayman is breaking even now. Yes, and so we're as Simona said, we're now moving towards strong profitability.
All right. So while Proven Group focuses on building a more stable income base for the wealth divisions, is it that there's no observed opportunity to capture deals and make trading gains for 2024 and beyond?
Yeah, listen, we're not going down the trading route. We don't want to be a trading platform. That's not in our business model. Our business model is providing wealth management services for clients for a fee, and providing banking services in international Caribbean jurisdictions. So that's our financial services model. If we do take gains, those will be the exception. but it's not a part of our business model.
Right. Taking it over to properties. Is the Ashko or Avista to be completed in 2023? And what other major developments have happened? Also, what carryover expenses were realized in Q2?
Carryover expenses were realized.
Yeah, they carry over some expenses from VIA Q2.
From VIA?
Yeah,
VIA from last year?
VIA from last
Oh,
year.
really? Okay. That sounds like, you know,
Extra.
that's fairly minor.
Minimal.
That's fairly minor. That's not
It's not
that's not a
material.
material item. That, you know, so
Right.
so to zone in, Ashko was not our development. We bought those units for rental. So, you know, that's an investment property. That's not a sale transaction. So we're going to rent it and we're going to get a rental from that. So that's, you know, that's not going to hit our P&L as a sale. But Avista will be Q4. Avista will start hitting the P&L in Q4. So, which is January, March next year.
All right. Still in the property space. Given the trends in the property market and the rise of Airbnb, given the trends in the property market and the rise of Airbnb, Jamaica now being deemed a safe destination, will Proven Properties consider timeshare and be and attract a new pool of investors?
No comment. Let's just say that we're working. We do recognize the attractiveness of the condo resort market. And we do see that a lot of our properties are being marketed in that space, are being used in that space. So I would say more and none, you know, stay tuned. We have like 1 minute. Are we?
Yeah, one more.
Okay.
Just did Purple Group collect the full amount for the Dream sale in July 2021, or is it still a receivable amount?
Well, first of all, it's very small. But Narisha, do you have that that information?
The answer to that is yes. That's totally off our books. That transaction has been closed.
Okay. Yeah, thank you. Yeah, that's done. So it's collected and that's closed.
And the last one, are there any plans for a bond issue in the near future? This one is from Javon Russell.
No.
But we do have some refinancing activities scheduled for February to March, so there will be a bond.
Okay.
Issue.
February to March.
February
Okay.
to March,
Yeah. All right. So yeah. Yeah. So yeah. All right. That's it. Yeah. So thank you. Very good questions. I really feel that we have a good group, shareholders. I really want you to, you know, I get a little upset, I must confess, you know, when, you know, the market reflects a trader mentality. And I mean, you know, all of us as, you know, as co-founders and as, you know, individuals that are associated with the business, I mean, we don't take a quarter by quarter approach to our business. You know, we firmly believe in what we've done over the last 13 plus years. You know, we've built, I mean, as you can see, we've built a Caribbean-wide brand in four pillars, and you know that's not easy. And so all I'm saying is, you know, believe in us as a shareholder, you know, as opposed to just, you know, trading our shares. you know, and understand the vision that we're seeking to deploy, and you know, either believe in it or not. But you know, we hope that you believe in it. But please appreciate that we're trying to build an everlasting business here, and we think we're on the right path. So thank you all. Thank you to my cybersecurity team for, you know, giving us a 1 hour window to do this. Lock it down after this for sure. But you know, shareholders and stakeholders, we're gonna keep the information flowing and keep you in tune. And I guess we'll see you again in another, you know, 60 to 90 days when we report on Q3. Have a great, peaceful and Merry Christmas, and you know, all the best for 2024. So stay safe, take care. Cheers.